Good morning and happy holidays to everyone, and thank you for joining us for today's national webinar titled Three Popular Alternative Investments in 2013 and Emerging Trends in 2014. I'm Munzer Ghosheh, the Business Development Manager for the Entrust Group, here based out of our Los Angeles office. I'll be your host for this webinar. Today we'll be discussing alternative investments held in a self-directed IRA and how that can help build your retirement strategies and savings. We will explore how these investment strategies continue to gain in popularity, and in particular learn about which three alternative investments were the most popular in 2013 among self-directed owners. We have a disclaimer that if you would please allow me to read out to you before we get started. The Entrust Group, Entrust, does not provide any investment advice or endorse any products. All information and materials are for educational purposes only. All parties are encouraged to consult with their attorneys, accountants, and financial advisors before entering into any type of investment. So our agenda for today is as follows. We will first discuss the importance of diversification in a retirement plan in specific. Define for you what is an alternative asset. What were the top three alternative assets of 2013 according to our self-directed IRA clients? How self-directed IRAs help you diversify? We'll summarize and then open it up for some Q&As. As far as the questions, feel free to please type in your questions there at the bottom of the controls there, and then we will get to them towards the end of the presentation. So the importance of diversification, in particular here we're talking about retirement accounts. You can go beyond the traditional investments such as stocks and bonds with a self-directed IRA account. Let me first define to you what is a self-directed IRA. Simply, it's a retirement account that allows you to be in charge of making all of your investment decisions with greater opportunity for asset diversification outside of the traditional investments as we know, stocks and bonds and etc. It allows you to invest, it's very important, in what you know and understand, rather than investing in what someone else tells you. There's so many opportunities to invest with a truly self-directed retirement plan. Keep in mind, there are only a couple of asset classes out there that the IRS defines as disallowable, investments that we may not have our IRA invest in, namely life insurance products, collectibles, antiques, and S corporations. Anything else you may invest in. I think the reason, in my opinion, why many people don't have self-directed IRAs is simply because of lack of awareness. They just don't know about it. 95% of the IRA market is dominated by traditional firms that basically allow you to diversify, but only in a narrow set of investments that they sell, products that they sell. So one of the main advantages of a self-directed IRA is the ability to diversify in both traditional and alternative investments, which could help protect you against the market volatility by not having all of your eggs in one basket. So again, diversifying allows you also to have backup options should an investment go south. So self-directed retirement accounts is the only type that allows for true diversification through alternatives. So what is an alternative asset? By definition, an alternative asset is a type of asset that is not typically considered part of an investment portfolio of what we know as stocks, bonds, and cash. So typically a self-directed IRA investor would come to us wanting to invest in assets just such as real estate, private placements, precious metals, promissory notes, whether they're secured by real estate, trust deeds or mortgage notes, or even unsecured notes, joint ventures, limited partnerships, hedge funds, even some unique investments such as life settlements, and the list goes on and on. Again, aside from those couple of asset classes that we've discussed that your IRA may not invest in, anything else is considered an alternative asset. So by far, though, the most common alternative investments are real estate, private placements, and precious metals. Alternative investments are gaining momentum. With the recent market volatility, it is making alternative asset investments even more and more popular. There's been a survey by the Global Survey of Individual Investors showed that 76% of investors surveyed are interested in products unrelated to the performance of the broader market. So typically non-traditional investments or alternative assets here do not tend to move in the direction of the market, which would help sustain the market volatility. Also, 72% of surveyed would actually consider alternative investments if their advisor recommended that. And that number has been increasing every year. It almost doubled from 35% surveyed in 2012. So I think investors are looking for something different. They're wanting to take control of their retirement funds. They're not looking for the same old answer. What we're also seeing in the advisor community, especially in the independent financial advisors, they're embracing those alternative assets as opposed to fighting against them as it was in the past. So what are the top alternative assets of 2013? Again, according to what we've seen our clients investing in. By far, our largest asset class is real estate. More Entrust clients invest in real estate than any other alternative asset. Almost about 30% are invested in real estate. And that whether it's single-family properties, larger commercial properties, raw land. A lot of clients just investing in raw land, holding the property there, the land. Rentals, leveraged properties, even offshore. Many clients are investing internationally. Probably the most frequent question we get almost on a daily basis is, can I purchase real estate with my retirement account? And obviously the answer is yes, but with restrictions. First and foremost, the property has to be for investment only, which means you may not live in it, you the IRA holder, or for that matter, anyone that's directly related to you. may not live in the property, vacation at it, or even render any services to it, whether management or rehabbing or what have you. So generally speaking, if you're buying a property from a third party, someone that's not related to you, renting it out to a third party, and then eventually selling it to a third party, there are no issues there. So in short, the transaction has to be at arm's length with no direct benefit to you, the IRA holder, or any of your immediate family members. There are different ways of purchasing real estate with your IRA, and we have specific webinars and or live presentations that discuss those in greater detail. But let me just kind of go through a couple of different ways that we see our IRA clients investing in real estate. Probably the most popular is just through a direct purchase, where the IRA owns 100% of the property. The title is in the name of the IRA. All the income generated by this property goes back into the IRA, tax-free or tax-deferred, depending on what type of retirement plan you have. And all expenses incurred by this property will be paid out of the IRA. And how interest will be involved in this transaction is the purchase agreement is signed by us as the trustee of your IRA. We coordinate with escrow, we fund escrow, we close escrow, and now the IRA holds the property. Very simple. We do this transaction almost every day. The second type of ways we see clients investing in real estate is through partnerships, whether it's partnering with yourself, meaning your IRA money and non-IRA money, or others for that matter, as undivided interest joint tenants. This could be common, for instance, on larger deals, if you want to go in to purchase a commercial property or some larger duplexes or what have you. The income generated by the property in this case and the expenses incurred are distributed and paid out proportion to the percentage of the ownership. So again, it's just joint tenants, undivided interest. Thirdly, we see clients investing through LLCs, limited liability corporations, where an LLC is formed, special purpose LLC, where the IRA is a member. It could be 100% member or just one of the members in the LLC, where the property is purchased by the LLC and then everything goes in and out of the LLC. So again, that's kind of a quick, brief overview of the different ways that we see our clients purchasing one of the, if not the most popular alternative asset held in an IRA, which is real estate. For more information on this, again, we have webinars that are just specific for that. We do live presentations all the time. Feel free to visit our website listed down below, and also call any of our offices for more information on investing in real estate with your retirement plan. The second most probably popular alternative asset held in a retirement plan is precious metals. We've seen an increased interest in precious metals lately. Investors generally buy precious metals such as gold or silver as a hedge against economic instability or inflation. And contrary to what many believe, self-directed IRAs can actually hold various precious metals. There's a list of permitted metals that are allowed in an IRA, such as U.S. government minted gold or silver eagle, and many others that are held inside your retirement plan. And typically, there's three parties involved in the purchase of or investing in precious metals with your retirement plan. One is the dealer that you're looking to purchase the the metal from. 2 is the depository where the actual physical metal is held. And 3rd is the administrator, like the Entrust Group or a custodian that will actually allow you to invest in precious metals with your IRA. Many of our clients have inquired again about investing in precious metals, that we've actually dedicated a center in Reno just for that. And we understand what a time-sensitive transaction it may be purchasing metals with your IRA, that our Precious Metal Center offers quick and easy same-day funding of your investment when it comes to precious metals, which we believe it's huge in our industry. Thirdly, the third most popular alternative asset held in a retirement plan, according to our clients, is private placements. Now, private placements basically is a term that refers to investing in privately held companies or small businesses. Very easy. Investing in private placements in an IRA is one way to diversify your retirement portfolio and has become increasingly popular with self-directed IRA investors. It allows you to invest your IRA in all types of companies or entities, such as startups, pre-IPOs, limited liability corporations, limited partnerships, C Corps. Again, the only type of entity that your IRA may not invest in is an S Corp. Recently, as we know, banks have restricted their lending to these private companies. It's becoming more and harder for these companies to be able to go to banks for what they want, thus opening the door for self-directed IRA investors for the potential to generate higher returns by investing in the next best big company before going public, such as Facebook, for example. But with the potential for higher returns, sometimes comes the greater risks. So it's very important to do your due diligence before investing in a private business. As always, consult with your attorney or financial professional before entering into any type of investment. So how self-directed IRAs help you diversify? Again, self-directed IRAs offer you the options to further diversify, to invest, as we mentioned, in what you know and understand. You can direct your IRA to invest in a variety of investment options, such as, again, real estate, limited partnerships, private placements, notes, precious metals, and the list goes on and on. Most financial institutions and traditional custodians do not handle paperwork associated with administering alternative investments. They have no vested interest in doing so. They're focused on a narrow spectrum of IRA investments, limiting you to the traditional investments, again, such as stocks and bonds and the other investments that they sell. What makes the Entrust Group so unique is that we don't sell any products. We just administer truly self-directed IRAs. What are some of the expectations for trends in 2014? Well, for one, the Jumpstart Our Business Act, also known as the Jobs Act, which was initially passed by Congress in 2012 to support business growth and is designed to encourage small businesses and startup funding by allowing individuals to become investors. The Jobs Act allows businesses, again, to accept small contributions from private investors, could be in the form of IRA funds, without making an initial public offering. So non-accredited investors, not just accredited ones, will be eligible to purchase these offerings without any restrictions. This might prove to be a very positive thing for the self-directed IRA world in 2014. With the increased number of entrepreneurs looking to start new businesses and looking for ways to raise capital. Crowdfunding, which is basically private companies having the ability to solicit and advertise their offerings via the internet online to, again, all potential investors, not just accredited, is gaining recognition among investors and becoming more and more popular, and we see that to be a very positive thing in the next year, in 2014. Also, as home prices continue to rise, even as we see mortgage rates higher maybe in recent months, the home prices are still continuing to rise, maybe at a slower pace. This could also have a terrific potential for growth in the self-directed IRA world as more and more people are looking to invest in real estate and become more aware of it, that they can actually do this within their retirement plan. And also, obviously, precious metals are, as we mentioned, continuing to remain a popular investment. So to summarize here, again, you can diversify your portfolio beyond traditional investments through a self-directed IRA. Again, a self-directed IRA will allow you to invest in all types of allowable investments. And it's not a type of IRA, it's a term used in the industry for a retirement plan that allows you to invest in anything but what the IRS says not allowable. It's popular and growing asset types, again, for the most part include real estate, precious metals, and private placements. Those are the three top alternative assets in 2013, and we see no reason for them not to continue in 2014. The Jobs Act will create more and more investment opportunities next year as more and more people are looking, small businesses, new businesses are looking for ways to raise capital. And the real estate market is very positive, is continuing to see a rise in prices, and that would only mean good things for 2014 as it relates to self-directed IRA plans. So how to take action? Open up a self-directed IRA with the Entrust Group. The process with us is very simple. It's seamless. It's just completing some paperwork, getting the account open within 24 to 48 hours. Secondly, you either contribute, rollover, or transfer funds from your new account, making your contributions for the year, or doing a rollover from your previous 401k employer, funds that are just sitting there dormant. Now that you know you can self-direct them, you can move them over to the Entrust Group, and now you're ready to invest in what you know and understand. Or transfer your current IRA with your traditional broker or banking institution to a self-directed IRA that allows you to invest in those investments we talked about. And then begin investing and take control to direct your future. And this is it as far as the webinar. So I'm going to see what kind of questions we have here from our listeners. I think we have quite a few here. Susan is asking, did you say that S corporations are disallowed for self-directed IRA investment? If so, then why not? Why is an LLC and or a C corporation allowed and not an S corp? That's more of an S corp rule. The S corps do not allow IRA and funds invested in it. It's not our rule, anyone else's. It's just the S corp. An LLC you may, a C corp you may. Again, when it comes to LLCs or C corps, it's investing in entities that you currently do not own. Obviously, it has to be a new entity. Wilma is asking, what is the fee at the Entrust Group for being a custodian for a self-directed IRA LLC? Well, first of all, we're the administrator, not a custodian for your IRA. Our fees are, we have a $50 setup fee, which is one time. In the case of an LLC, keep in mind, we do not set up the LLC. You would need an attorney to do so. All we're doing is funding the LLC for you. To do so, we charge a one-time fee of $95 to fund the investment, and then a yearly fee of $295 to hold the actual asset for you. Good question, though. Michael has a question. I'm a healthcare company that is looking for private placement funds. How can I present my financial opportunity to Entrust self-directed investor? Where unfortunately, Michael, you may not. One thing we do not do is we don't sell any products and we don't make any recommendations or refer. The whole idea of a truly self-directed IRA is the client or the potential investor to identify their own investments and then direct us to make the investment for them. Chris's question is, can you borrow for real estate in an IRA? If so, would a Roth be a good way since that would be tax-free on any gains? We cannot advise you, obviously, which IRA is better for you, whether it's a Roth, a tax-free, or a traditional, which is tax-deferred. That would be a question for your CPA and or accountant to advise you on that. But can you borrow for real estate? The short answer is yes. You may leverage your IRA. Again, keep in mind the IRA is as an entity applying for the loan. So per IRS rules, and again, I'm just giving you the very short answer here, it has to be a non-recourse loan. Basically what that means, the lender has no recourse on anything but the property, and they may not use your income, credit, or employment to facilitate the loan. So, good luck finding a lender, a traditional lender to do so. There are many non-recourse lenders that are able to facilitate that loan for you. Any questions, please let us know. I'm happy to discuss that with you, an individual, too. Ben is asking, can I open a self-directed Roth IRA? If so, are all of the same investment opportunities available? Absolutely. A self-directed IRA, and again, we get this question all the time. Individual is completing the account application, and they're looking for the box to check for self-directed. We have traditional, we have SEP, simple, Roth, and again, as I previously mentioned, a self-directed IRA is not a type of IRA; it's just a term. So any IRA that you have currently moved and transferred over to Entrust by default becomes a self-directed IRA. So if you have a Roth IRA and you want to transfer that over, that becomes a Roth IRA with Entrust, and it allows you to invest in any type of investment that a traditional or a SEP or a simple IRA allows you to do so. And if you want to just open a brand new one and make contributions, sure, you can do that as well. Frank's question is, can you still invest in stocks with your self-directed IRA? Absolutely. And again, we talked about that's one of the benefits and advantages of a truly self-directed IRA is that it allows you to invest in traditional investments such as stocks, bonds, and so on, and alternative investments. So you can do both. Raoul's question is, can you partner, there's many questions here, I like that. Can you partner with someone else who is not part of an LLC and purchase a home and go 50-50? If I understand your question correctly, is yes. I mean, you may partner with anyone. Partnerships to start with as undivided interest. And you go with, if you say go 50-50, 50-50 is if you put in 50% and the other partner puts in 50%. But those percentages are based on the amounts that you put in. Hope that makes sense for you. Let's see, what else do we have? Rakesh is asking, you have a list of investment vehicles. Again, we don't sell any investments, Rakesh. Again, we allow you to invest in all types of investments that are out there. The only thing you may not invest in, as I previously mentioned, are insurance, life insurance products, collectibles, antiques, and an S corporation. Scott's question is, comment on converting a traditional IRA to a Roth IRA. Well, I mean, everybody is aware of what the differences are, and obviously this is not a webinar for this, but a traditional is pre-tax. All the proceeds are deferred. All the profits are deferred, and you pay them when you take it out. Roth IRA is tax-free. You can convert any time, sure, and we'll be more than happy to do that for you. Let's see, what else do we have? Ben's question is, can I invest in a private company that I have a previous interest in? Well, in general, you cannot invest in any company, or your IRA may not invest in any company that you have interest in. Previous interest, I really don't know. I mean, that would be a question you might want to pose to your attorney. It's all about intentions. When did you sell your interest? And so on. But generally speaking, I would say the answer is no. Look for investing your retirement funds in private companies that you or anyone else that's directly related to you have never had any interest in. Marty's question is, if you place or buy or sell order, what is the turnaround time for the order to be processed? Typically, our funding turnaround time is about 48 hours. For real estate transactions, as you might imagine or appreciate, would take a bit longer. It's sometimes up to 3, maybe sometimes up to 5 business days for us, for the real estate department, to review all of your documents before processing your real estate transaction. But anything else, 48 hours or so, we're able to fund the investment for you. Rich's question is, can my children rent a house that I bought with the IRA? Rich, unfortunately not. Your children are considered a disqualified person. Again, a disqualified person in general are, besides you, is your spouse, your lineal ascendants and descendants, meaning children, grandchildren, parents, and grandparents. All of these individuals are considered disqualified persons, and renting to them would constitute a prohibited transaction. So again, you want to purchase a property in your IRA from a third party, rent it out to a third party that's not disqualified, and then if you're looking to eventually sell it to a third party. We have one more question here for Ted, and then I'm going to go ahead and conclude the webinar. Great questions, everyone. And again, feel free to call me directly or email us with any questions that you may have. Ted's question is, do you have a fee schedule on your website? Absolutely. All our forms, including our fee disclosure, is listed on our website, and let me give that to you. It's www.theentrustgroup.com. My direct email is mghosheh@theentrustgroup.com, and I'll spell that for you, mghosheh@theentrustgroup.com. My phone number is 310-496-4216. Our corporate number is 1-800-392-9653. Well, I want to thank each and every one of you for attending today's webinar. I hope that you found it informative and educational. We hope to see you at one of our upcoming webinars, and happy holidays for everyone.